Welcome to Speidel's California Minute. I'm your host, Catherine Zidane, and this week we're covering Employment Development Department worker classification audits and the potential for penalties to be assessed on tax professionals. We'll be covering worker classification issues in depth at an upcoming live webinar on June 30th. You can get details and get signed up at caltax.com under the Webinars tab. With the recent changes to worker classification rules in California, there's been a lot of confusion about how to properly treat workers who are employees versus independent contractors. Staying on top of these rules can not only help your clients avoid penalties, but you can also protect yourself from penalties. We've heard reports of more EDD audit activity recently, so be prepared to see some in your practice. Audits are initiated based on Form 1099 information and at random, targeting industries with a history of worker misclassifications. We requested a status of employee versus independent contractor audits from the EDD, but they were not forthcoming about their audit programs. When we asked which industries are being targeted for audit, the EDD's response was that AB 5 only changed the law for determining whether a worker is an employee or an independent contractor and didn't impact the audit selection process. We've been told by a number of subscribers that their clients were being audited, and the auditor was using AB 5 to disallow independent contractor status even before the January 1st, 2020 effective date. According to the EDD, when self-employed workers became eligible for unemployment compensation during the COVID-19 pandemic, the EDD sent requests for employment information from many of the businesses that sent the contractor 1099s and called 1099 recipients asking for copies of the 1099s and tax returns. They also told us that, like any obstructed claim, an audit can happen if an independent contractor files for unemployment. Dynamics and AB 5 originally came about because of labor violations, and from what we're hearing from subscribers, a business is more likely to be audited by the Department of Industrial Relations for labor violations than by the EDD, and the cost of the violations could be extreme. Any paid advisor, except an attorney, but including a CPA, EA, or tax professional, who advises a client to treat workers as independent contractors can also be held liable for penalties. It also appears that if a non-attorney or an employee of the business advises a client to treat workers as employees, but the business misclassifies the workers, the tax professional can be subject to a penalty if they prepare a return for the business, reporting the workers as independent contractors, even if the business went against the advice of the tax professional. In this situation, the tax professional should not prepare the return. To limit your exposure to malpractice, we recommend using engagement letter language for your business clients that states that you will not be responsible for advising the client with respect to independent contractor status, and that you encourage them to consult with an attorney with employment practice experience. Speidel's analysis and explanation of California taxes reference manual covers audit processes for all of the California tax agencies. You can pre-order the 2023 edition at caltax.com under the Publications tab, and there's a discount that runs through June 27th. That's all for this week. Join us next time for another episode of Speidel's California Minute.